I'd like to share a brief update on how we're delivering on our strategy and capital allocation framework. The framework, which describes our leadership priorities for the next 4 years, is simple. We are focusing our portfolio and utilizing our financial strengths to grow, return cash to our shareholders, and create significant value. We're pleased that we completed the strategic realignment of Dow Corning on June 1st. The realignment is substantially tax-free and it unlocks significant value for our shareholders. Furthermore, the completion of the realignment, we are making an important update to our capital allocation plan, which I'll explain in a moment. First, as a reminder, Corning exchanged its 50% interest in Dow Corning for a newly formed company that holds $4.8 billion in cash and about a 40% ownership in Hemlock Semiconductor Group. $4.8 billion is approximately 30 times the annual equity earnings of Dow Corning's silicones business. Because of this realignment, we're increasing our expected sources of cash to between $26 and $30 billion by 2019. This is up from our prior guidance of $22 to $26 billion. Underscoring our commitment to excellent capital stewardship, we will fully deploy these funds consistent with our capital allocation plan. We're also increasing the amount of cash we expect to return to shareholders to more than $12.5 billion, up from more than $10 billion. To grow and sustain our industry leadership, we continue to plan on investing $10 billion in RD&E, CapEx, and acquisitions. Now, retaining our interest in Hemlock has several benefits. These include expected equity earnings and dividends, and the potential for growth when the solar market recovers from its trough. Complementary products and market access opportunities, continued relationships with leading specialty chemical players, and increased market visibility and access for our semiconductor innovation programs. Since we introduced the strategy and capital allocation plan in October 2015, we've made significant progress towards our shareholder distribution goal by opportunistically repurchasing shares and raising our dividend. Here are some highlights. Since October, we've returned more than $2.8 billion to shareholders, including the accelerated share repurchase completed in January. We also increased the cash dividend per share by 12.5% in February and have paid a total of $173 million in common dividends over this period. Furthermore, we announced 2 additional transactions that advanced our growth and are tightly aligned to our core capabilities and platforms. In January, we announced a joint venture with Saint-Gobain to develop, manufacture, and sell lightweight automotive glazing solutions. And in April, we announced an agreement to acquire Alliance Fiber Optic Products. We look forward to welcoming this organization into Corning in the coming days. This acquisition deepens our relationship with cloud data center customers, expands our access to OEM and Asian customers, and brings products that we can integrate into our portfolios. So to summarize, we're making solid progress. We are creating significant value for shareholders by utilizing our financial strength to supplement and enhance our growth while providing very attractive cash returns through substantial dividends and share repurchases.